When I heard about this idea from Ali, I first didn't get it. It took me a while to truly understand it.
Yeah,
but
true.
when I started wrapping my head around it, I just wanted to disprove it. So I started researching a little bit. Like, what is he missing? What is the problem with it? And the more I research it, the more convinced I got with it.
Like SMEs financing in the region is massive. Buy now, pay later, rent now, pay later, remit now, pay later, fly now, pay later, get married now, pay later. I'm kidding.
Resolutions was not to read any books. I realized that in the year before that, I read maybe 20 or 30. And guess how many companies I started? 0.
Good morning, everyone. Welcome to Diaries. Today, we're joined by Allan and Ali. Ali is a serial entrepreneur in the fintech space. He was a previous investment analyst, and he's co-founded 3 fintech startups at this point in time. And Allan is an ex-operations guy at Amazon who was leading products across Canada, and has now developed a financing solution for cars and automobiles in Saudi and the GCC. Thank you so much for being on, guys.
Thank you for having us.
Thank you. Super excited to be here.
Likewise. Just to begin with, could you perhaps explain to us, how EmFlex came to be, and what the business model of this concept really is?
Fantastic. So yeah, EmFlex is really comes from the recent wave of embedded lending. And broadly speaking, it's around embedded finance. And embedded finance is more like having to consume financial services on non-financial services platform. That includes e-commerce platforms, service platforms, content platforms. And this is where you find most people are. So the idea is there's a shift in consumer behavior that has been happening over the past few years. And a recent research that's been happening, they mentioned like new customers would like to have financial services come to them rather than them going to them physically or digitally. So that includes like not going to your banking app, but rather consuming that financial service on other platforms. And honestly, based on my experience and my career over the past 15 years, I think embedded lending is just starting out. It's going to be Finance 2.0, and the idea of EmFlex came to represent that. If you've seen the recent wave of buy now, pay later, whether globally or in the region like Tabi and Tamara and whatnot, those are embedded lending solutions for the personal finance space. Right. However, like there are so many different banking products that comes to play as well that could be embedded. Right. So if we're taking the personal finance, then you still have SMEs financing, you have car loans, you have mortgages, you have supply chain financing, you have B2B, you have so many different products that our auto financing basically that can be embedded. It's just we started as a whole, like as an industry, we started with the buy now, pay later, and proven to be very successful for a number of things I can get to later. But yeah, this is where EmFlex came to be. However, if you look at the models of buy now, pay later in the market today, they're essentially funded by the fintechs themselves. Basically, it's a balance sheet lending where they get the financing, they get the capital, and they lend to the end customer. However, I truly believe that banks want to play ball and they want to get into the embedded finance or embedded lending game. However, there's a lack of the right technology that sits in the middle, right? Because embedding is necessarily an ecosystem-driven strategy where you have to have financial institution embedded into marketplaces or merchants or different like non-financial service platforms. And however, like the way they're structured today does not allow them to do so. So essentially, you want to create that technology, and this is exactly what we're trying to do. So EmFlex is it's an embedded lending solution for the auto financing space, right? And we're tackling this issue in particular in Saudi because it is a huge market. It's in Saudi alone is around $10 billion annually of car sales, which potentially is around 70 or 80% of that is being financed. That market probably represents more than 50% of total GCC volumes when it comes to car sales.
Okay.
So it's a massive sort of...
That's the perfect place to start then.
Yeah, exactly. That's why actually we're starting with that. However, the long-term vision of EmFlex is much broader, and it goes to embed different banking products, whether it's auto financing, mortgages, and whatnot, and omni-channel approach. Like you would embed into, let's say, platforms that like similar to Shopify, right? or platforms that sells houses or rents villas or sells cars and whatnot. So we believe that's the way to go. Now, in terms of I would say the business model, in this case in particular for EmFlex, when it comes to the auto financing, we're following the same proven method that buy now, pay later actually is making money of, which basically you provide value to the merchant, right? So, for example, how does buy now, pay later operate? Is basically they have a discount from every merchant that they integrate with, but that's backed by the increase of volume that the merchant is getting in terms of sales because of that buy now, pay later facility that sits on their platform. And as such, in our case as well, we sort of make deals with car distributors in the kingdom, including all the big names, in addition to the online marketplaces that sells cars. And by telling them, hey, rather than closing your sale in 7 days, where your customer is struggling to get the right financing deal or amount, we're getting them their best offer in the market, and we're closing, let's say, in 24 hours. And that in of itself, to them, is what they need. Like the massive wholesale distributors in the kingdom, the number one priority for them is to improve sales, right? And this is, in a way, this is how we take a cut from every car that is being sold. Also, there is a sort of a unique problem to the auto space in Saudi, which is there isn't a centralized inventory for the cars in the kingdom. And this is something that we would never have found on the surface. We had to talk to so many different banks, financial institutions, dealerships, showrooms, you name it, right? And we figured out there's a problem with the inventory. And let's say, I'll give you an example. When a bank wants to sell a customer a car, sometimes it takes 7 days to get the final approval for that car, right?
From the bank itself.
Yes, exactly. But at the same time, the merchant or the dealer, basically, he has that car in his
ready.
Yeah, it's like ready. Anybody would come in and try, would potentially would want to buy it, right? And then you get the approval from the bank and the car is not there, So we're sort of also building a SaaS solution around that model, where we have an integrated real-time all market inventory of cars in the kingdom that allows bank to have more control over what they want to finance, reserve, control, and sell going forward.
It's very interesting. So I feel like you play in two channels there, right? It's to the end consumer, which, now that I'm thinking about it, the way you explain it is very much what's happening, for example, in hospitality, right? Because I came across this deal recently wherein essentially there's these startups like Selfbook and Namaste, in Europe and the US, that are trying to be front end for hotels directly. So instead of going to aggregators, like even in the automobile industry, you'd maybe go to an aggregator website that has cars from multiple different distributors. You could directly go to a distributor and get your lending from them. So you're cutting out this middleman, which, these guys have to give commission to, I'm assuming.
Yeah.
And you're giving access to the end consumer directly, but also on the, almost upstream there, you're allowing these distributors to then get financing from the bank in a much easier way.
Exactly. And I think it makes sense. Essentially, we wanted to do it to take commissions from the banks, but we felt like also the small showrooms actually are getting that. So we didn't want to cut into that.
Yeah.
And we felt we can sort of play a more broader strategy in that direction and help distributors sell more. We can also re-engineer some of the rates of the banks. If I get a good chunk of discount, good margin from a distributor, then I can re-engineer the rate the customer is paying and give him a better rate buying certain brand. In a way, that sort of incentivizes the customers to sort of buy it.
Very interesting. And then that also allows you to customize your solutions, across different distributors. So you can then acquire different customers at different rates.
Exactly. And we can also we can also do white label solutions, exclusive deals and whatnot. And even for the distributors themselves, if I have that facility, like the SaaS solution, I would be able to white label the distributor's name into the on-the-ground agents. And that also is an added value service for the on-the-ground agents that is provided by the distributor itself. So.
Okay, so see, it tells me that you've gotten so deep, in depth in the car industry, right? And as you're saying, buy now, pay later, as well as embedded financing, will be something that people speak about in the future, because you get direct access to a host of different services. And I feel like your plan is to create this ecosystem of sorts. So if that is the end goal, then how do you track milestones? How do you say, as for example, you're a serial entrepreneur. This is, if I'm not wrong, your first real entrepreneurial journey. Right?
Second one.
Second one. Okay, sorry. Apologies for that.
No,
I should have done my
fine.
research. But what I'm saying is, when you have something with an end goal that's so broad and it is deep, but it's also, it's an ecosystem of sorts. And how do you decide, we need to hit certain milestones with this one until we can then scale and pivot to a next product and the next product? Because, for example, Noon did that, right? And Kareem did that, wherein they had one product and then they started adding different services and they became this almost host of things that you're reliant on a day-to-day basis.
Yeah.
So how do you do that for the end consumer? Or how do you envision that?
Yeah, I mean, that's obviously a fantastic question. So, yeah, I mean, like entrepreneurship 101 is to have something, even if it's a very small piece of thing, like it's a very niche space, and do it really, really well, right? So even though we have like a very broad mandate and we feel like we can get into that embedded lending space like across the board, perfecting the auto financing vertical end to end is the way to do it, right? If you're able to do that, then you have a multitude of options, whether to do the same vertical in, say, UAE, or I can just replicate the same structure I've done, let's say, in the housing market and the housing financing. It's just you need to go into deep details of the same vertical, because that is going to teach you so much of what the customers need and the challenges, problems. As you mentioned, that the inventory came to be one of the issues, and it meant that we've done like deep into this. And yeah, it's like if you look at banks historically, they'll have 20 products lined up, like any bank would do: housing, personal financing, auto leasing, all those type of products. But they're not very specific. They're not very focused on that in one product. And that's this is where you have a lot of challenges. And this is where you have some customer not being satisfied with what's been delivered. But the idea is like, and to your point, like if you mention Noon and like even previous examples, like Amazon started with books, and then you can sort of replicate that.
Absolutely.
Based on what I've seen, there's a company in the US that is doing what we're doing, but this is like it's a very new space, right? It's like you don't have so many successful models that are out there, and it's part of what makes it fun.
But when you have something that's brand new, it also forces the environment you're in to innovate with you, right?
Exactly.
So it's almost as if you might currently be reliant upon the existing regulatory scheme, but then the regulations also move forward with you, and banks would create customized products with you because you're building something that's new, something that's not been seen before.
100%.
But I mean, so that's I understand your perspective as well, because I feel like, and you have way more experience than me, 15 years in the industry, but when you work in financial services in particular, you're really looking at deals on a deep level sometimes, right? And then you understand how different industries work. And then, the dream is always to then take what you learn and create something of your own, because you want to be working for yourself.
True.
Right? So I understand where you come from. But from your perspective, right, this is your second entrepreneurial journey. How did you take EmFlex forward, coming from products and operations and in a different environment, right? Because you relocated at some point to Canada.
As amazing as corporates get, I went after my dreams and I got them in the positions and all in the companies, and I still felt empty inside. And previously, I've left Amazon to pursue my own company. It was in a different field. It was in sports tourism, and I really enjoyed that process. It was the hardest thing I've ever done, but it was also the most fun, and it taught me the most. So since then, I've been wanting to do it again. And over the last, I would say, 6 or 7 years, I started developing a deep interest in financial technology, starting from my own personal finance and then extending into the broader space. And when I heard about this idea from Ali, I first didn't get it. Okay. It took me a while to truly understand it.
Yeah.
But when I started wrapping my head around it, I just wanted to disprove it. So I started researching a little bit. How can I, what is he missing? What is the problem with it? And the more I research it, the more convinced I got with it. And then I decided, let's give it a shot. Yeah. And so far, this is the direction we're going for. He's envisioned the business model and he's identified the opportunity very well, because that's his game. And I'm helping with the scaling part of it. So although we have big visions, we cannot get to them if we don't build the company from day one to scale. And that's where the Amazon experience comes in, because we're used to scaling. We haven't done the 0 to 1 as much, but we do the 1 to 100 every day. across operations, product. And this is what I feel it was a good combination between us both. And so far it's going well. It's the hardest. The first year is the hardest. And if that's going well, I think, I'm very excited to see what's next.
Amazing, mashallah. Because like you're saying, right? I mean, yes, Amazon was not entrepreneurial, but there are certain companies like Amazon. Like I was watching something about Discord, the CEO speaking recently, and he almost treats his new features or new products as a new company. And then he gives them, a task at hand, a budget, a way to scale, a way to penetrate different markets. And then you treat this team, that product team that you have, treats it like its baby and grows it. So I'm sure that experience as well melds into your entrepreneurial experience.
100%. And my dad has built his own business. I grew up thinking that's the normal thing to do. So I was surprised to hear that, you're supposed to get a job and make a resume and try to condense your life into one page and then hope someone sees your value. It's a pretty messed up process, to be honest. I've done it and we have to do it sometimes, but building a business is a different game. It's a different journey. It's not just financial. It's also spiritual, I feel.
When you say spiritual, what do you really mean by that?
I mean that you have to look at the world and decide, there's something I can add to it that does not exist at the moment. In that journey, you have to grow yourself because it's impossible to start knowing all the answers. It's impossible. That's not how it works. So this growth journey is what I think is very interesting. And it's taught me more than, 1 year of running a company is better than 5 years of engineering school to me.
I get that because I feel like there's little moments of failure or almost doubt that you have to face and contend with all.
You have to pursue the failure. Yeah. Not only that, you have to look at where, the market is failing and you have to go attack that area with passion and diligence and invent shit that doesn't exist. So I think that's very cool.
I see how excited you are for it. I feel like there's a good balance here, right? Like I feel like you're a bit grounded and he's extremely excited.
Yeah, mean, we yin and yang. So
as it should be though.
Yeah.
When you start something with someone, I mean, explain to me this relationship because I don't know, maybe you've spoken about this before, but how did this come to be? Did you guys know each other for a long time?
We met in September. We started working together in November.
Oh wow! Okay.
Yeah.
Okay.
So
immediate connection.
It was. Ali, you want to take this?
I mean, probably we've been to the Antler residency, which is almost a 2.5 months sort of residency, which I tend to find fascinating.
How does the Antler process work? As in, do you have to go there with an idea? Or do you tell them, I want to build something? And based on your experience, they allow you to enter?
Some of the requirements that they have is that you've been an ex-founder or entrepreneur, that you've done at least 1 or 2 things previously. You're passionate, you're excited to build new things. You don't necessarily have to have an idea, and you don't have to be either a technical or like a domain or you can be anything, right? And essentially what they do is they get usually for every cohort, they select anywhere between 80 and 100 people, but usually it's a mixture of people. Some of them, they have ideas, some of them are technical, some of them, they have domain experience, in, let's say, agriculture or whatnot. Some of them, they're good with strategy and whatnot. And then you'll start playing sort of games, I would say, right?
Who's attracting different kinds of people.
Yeah. It's who's gonna be with who, and then they break up, and then you're gonna find somebody else.
It's like high school again.
Yeah, and actually, Allan was with somebody else when we started.
Oh, you stole him away.
No, and he was with someone else.
And I was someone else. And then he broke off with that guy, and then he joined our team. Then my co-founder left.
Okay.
So it's interesting. But I mean, I would recommend every entrepreneur to go through the Antler experience. It's amazing. It's 2.5 months. You live with those guys for the whole.
It's a boot camp.
Yeah, it's a boot. You live together, you work together, you eat together, everything's together, and it's it brings you back childhood memories.
Do you wear the same clothes also?
Not
dystopia.
You get the shirts. You get the Antler shirts.
Yeah.
Everyone in one canteen just eating food.
They don't want you to wear their merchandise, but no, you don't necessarily have to do that. But then, it's you're with 18 people that you've met for the first time, and everybody else is the same. So you get to test your social skills and your business skills. You don't have any leverage, right? It's it's a
ground zero.
Yeah, it's a ground zero for everybody.
Yeah.
Nobody has anything on top of anybody else. So it was an amazing experience, honestly.
Okay, amazing. I mean, I think that's the way people learn the most as well, right? You have to want to talk to someone who's completely maybe more knowledgeable, but in a completely different industry. And then you come together and you have a meeting of ideas and all.
True, 100%.
Yeah, and they're running, just to close on that topic, their cohort in Dubai is happening in a few months. So if anyone's watching this, I think you should look into
watching
it.
this, I'll drop you his number, text him when you
No,
get
you can go to antler.co and look up all the information. I can only recommend and talk about my experience, but it was fantastic. And halfway through the program, I remember telling my wife that whether I get the investment or not, it's already been worth it just from the people I met there. And of course, it starts with Ali and my ex-co-founder, but it extends to my roommates, the people I was learning how to code from, understanding go-to-market from someone who's done it. So it was amazing. And those connections didn't die. These are connections that might be your tribe for the next decade or two. So absolutely recommend, at least give it a shot.
We'll plug in Antler as well in the link in the description. Please check it out. Yeah, I mean, this is very unconventional for me as well, because, you know, when you mainly look at early stage startups now, you always have a tech guy, right? Like someone who's a CTO and someone who has an extremely technical background. And this to me is unconventional because, I mean, you said you were learning how to code, but I assume you don't come from a coding background, right?
No.
And neither do you.
No.
So how do you deal with, because this is a SaaS model, right? It could be a flat fee, but it's going to be a SaaS model, let's be honest. So how do you deal with or contend with the fact that you need to bring in technical lead as well once you leave Antler? Because, you know, we're taking it from, okay, you have the idea, you've developed the strategy, now you've left Antler. What happens next? How do you recruit a team?
I think tech was a bottleneck in the last 20 years, but as of November 2022, when OpenAI released ChatGPT, it's becoming commoditized. So there are challenges to it, how to scale, how to pick the engineering architecture. But I think the challenges in the startups that are coming up now is distribution first, the business model, identifying the need, and being able to develop the business, selling the shit that you're building. So I think the challenge or the bottleneck is shifting away from tech. I'm not saying it's not important, but I'm saying in the first 6 months, you can do without it, or you can do with basic tech or demos or MVPs or a semi-technical person.
Yeah, I mean, so I heard this, there's two examples I have that corroborate this almost, right? One, someone said to me recently that with AI coming into the picture, we have more freedom to think because we don't have to remember and know how to do, right? Like the bot can almost do it for us, but we have more creativity. So it opens our mind up. We don't have to sit down and remember formulas or the way things work. And then secondly, I've seen this in real life as well. A friend of mine, dear friend of mine, he's just left Deloitte. You know, he's at Deloitte for 3 years, did his M&A advisory consulting stint, and now he's moved to India to have a startup, right? And he's developing, I mean, and he's developing this optimization for recruitment and HR. Inshallah, it comes out in a few months. He's already, you know, piloting it. And I asked him, man, how did you have no coding experience? And he said, I sit down with AI and I ask it to do it, and then I verify against the book, and it makes our lives easier.
100%.
So in terms of fintech itself, so you had almost 3 different ventures, one of which is active, you know, alongside EmFlex. So you have an extensive experience in fintechs in the region, at least. What do you see as trends moving forward now that both of you have been to Antler and seen these kind of trends?
If you look at the embedded financing space, right, it's really about ecosystem-driven strategy where you have to have a number of integrations, right? If you ask me 4 or 5 years ago, would this solution work? I would probably say no. Any embedded lending solution would fail. That's because how banks and financing institutions and financial services in general has been doing business for the past 200 years. Banks for the past 200 years been operating as standalone shops, right? They don't it's an open shop. You come, you buy, and that's it. That's that, right? So even internally, they're independent, they're siloed, organized like entities within within the banks themselves. They have legacy infrastructure. They don't have enough modularity in their infrastructure. So coming in and just proposing, okay, I want to build an integrated solution with you where we're gonna share operational risks, or we're going to sort of have to do a data sharing mandate, or that is to them is like speaking Chinese, like if they're like from the region, right? And however, I think how the regulators been moving in the past few years has been fascinating. And if you look at what the likes of SAMA and the Central Bank of UAE and the Central Bank of Jordan been doing, is basically they're having these frameworks that allows for more innovation, that allows for more controlled innovation within a certain environment. And this is you have the sandboxes where you can test solutions, and you have a limit of the number of transactions that you can do in the market. You have open banking frameworks. You have banking as a service that you can utilize. You have like those different frameworks that the central banks are actually issuing in the market. I would say the open banking framework changed a lot of the perception in the market, because it sort of forced banks to expose APIs to the market. And what this means, and just like an open banking basically service is basically, I want to get a loan from an institution A and my account is at institution B, right? I would authorize institution A to pull my data from institution B.
Okay.
Right? And basically, how do I do this? Institution B must have APIs that integrates with institution A and allows for that data to be
So
pulled.
your business is almost up for auction at any given time.
Exactly. So in that sense, banks would never share data before, right? And we follow the same model, because today let's say any approval for the loan would have to be integrated with the bank and the bank's underwriting engine and whatnot. So I think the perception has been changing in the past 4 or 5 years. What I've seen from interaction with banks and non-bank institutions in the region the past few years, because of that shift from the central bank, they've been more positive. They're building a lot of solution that allows them to integrate in the market and be more innovative. Not only that, plus you have a number of fintech players that are becoming massively successful in the region. Like yesterday, Lendo from Saudi, they've closed a 700 million loan facility from Morgan Stanley, I guess, for their loan book. Which is an SMEs financing company that started 3 years ago.
Do you know this? I'm sorry. Does the SME financing follow the same 19:1 debt to equity standard for banks?
Like the debt to equity ratio, you mean?
Yeah, because they're like, for example, if you have a bank, their total order book, like, in terms of loans they're giving, has to be equal to 19 times of their equity. So, for example, if they have
not necessarily, not by law. It's for the bank, it's a bit different. They have their own regulations. But generally speaking, like from a healthy standpoint, they'll have to have some equity on the books,
of course.
At least 20-30%. But it's not mandated by regulations. But yeah, like SMEs financing in the region is massive. Buy now, pay later, rent now, pay later, remit now, pay later, fly now, pay later, get married now, pay later. I'm kidding. I guess it's gonna happen.
It's a good one, actually.
Yeah,
it's a good side business.
Yeah,
it's your fifth word.
Yeah, but
2029.
Yeah, man.
But yeah, I mean, it's like those sort of plays that actually integrate or find, let's say, new business models that are not traditionally served by banks, right? B2B is a massive play in the region. There is like probably a 2 trillion capital locked in between merchants in a supply chain. There is probably 2 trillion that is locked in.
I'm sorry to cut you off, but I mean, the first thing I think of when you keep saying buy now, pay later, rent now, pay later, marry now, pay later, is cash conversion, right? Because who holds the cash at any given time? And if there is, for example, what happened with COVID, it probably won't happen again, inshallah. But if we have a blockage, then if you've already collected cash that's, prepaid revenue, then you have payments to go to not only refunds to go back to the end user, but then you've got the guys you actually have to distribute back to in terms of cash, right? So the cash conversion cycle collapses immediately.
100%.
So is there a solve for this in this particular market? Or because, of course, there hasn't been a liquidity crunch. And in this region, it's probably tough to get into a liquidity crunch, right? Because you look at buyout funds, you look at bigger strategic players in the West, they actually are governed by laws where, you have to pay back your debt at some given point in time. But most big funds here or financing players here are eventually owned by a government that is very cash rich. So the liquidity crunch here doesn't really exist for the big players. But when you have small startups coming up, is there a problem with cash conversion there? Is there a conversation to be had?
Not necessarily. I mean, if you're talking about, let's say, a supply chain solution, what I saw in the market is basically that trade relationship is between the UAE and India, right? And there's an existing, like a couple of players that are actually doing this. Is basically they link back with a lender that is based in India or does facilitate payments and trade and remittance between those two countries. And in a way, those merchants that, let's say, bring merchandise from India to the UAE basically are covered by, like it would be financed by someone in India that actually has access to this market. So not necessarily you would find that. And I think a lot of the fintechs you find here are basically, they get creative. They would work with partners in different markets to make sure that this doesn't happen. But yeah, I mean, even from a supply chain financing, let's say specific solutions, I tend to find most that have cracked into that game are fintechs that are owned by big players. Yeah.
Or there is, I feel like, a consolidation that happens at some point, right? Like you have a good solution and then someone comes and integrates you into their value chain.
Exactly.
Just shifting the conversation slightly, we also wanted to touch upon, how perhaps your Amazonian principles could be applied into entrepreneurship. Because, like you're saying, that there's so much creativity in the space right now. And it's either having a large backer or being creative in the space, and your regulation now allows you to be creative. They move with you, right? Like the SAMA and the ADGMs here. But then there has to be frameworks that you operate under. So even that creativity, the framework has to almost propel it forward and inspire it. And have you, had a hand in setting that in to Amazon?
Of course, no, great question. And it's hard to spend time at companies like Amazon and not pick up something where they are because of, something that's working. And I think the leadership principles, as they call it, although, you don't always adhere to it 100%, but it has a lot of wisdom in it. One of the most important things for startups is bias for action. In one word, speed of execution. When you're going up against potentially fintechs with a lot more funding, a lot more resources, a lot more personnel, the only thing they cannot do is the speed that you operate in. So the ability to tweak your business model, the ability to attack different markets, the ability to just be on top of things faster than them, that's how you win. I mean, if you think about it, there's no tech company that's building something that Google can't replicate in a year. But can Google move at the speed the startup is being? Are they limited by bureaucracy now? Unfortunately, they're starting to be. So I think that's the one thing that we have to keep with us, the speed of execution. And it starts from all the way from the CEO changing the business model based on market insights, which we've done, all the way to an intern being able to deliver something. If it takes an hour, do it today. This isn't something that needs to be scheduled for tomorrow. Just get it done.
Interesting. But I feel like, do you think there might be a compromise between, quality of execution and speed? Because yeah, you can move faster, but then you have to, it's not only the first movers who typically succeed, it's the ones who do it right.
Speed does not necessarily compromise quality. I think speed of action is proportional to learning. So you can have a theory and you can think and, strategize on something, but until you go and try to sell it or build it, you don't know what the market has to say. So I think the faster you execute on things, the faster you'll learn where you need to pivot and what you need to change. In terms of compromising on quality, I think the opposite. The slower you are, like if you come up with a strategy and today we think it's a good plan to do thing X, do you think it'll be a good plan to do it today? Or do you think delaying it a month will make it a better plan? I think you should do it today. And by the end of the month, now you have an even better plan to do it again or to optimize it. So I think speed is winning.
Yeah, I think, it's almost like time value of money, but time value of effort, right? Because if you do it now, you'll also be able to iterate. And I feel like in our generation in particular, like my generation in particular, there is a stark difference that people, have almost forgotten between the dopamine that you receive from information, from learning. Like, I sit down and I say, okay, I've seen X number of stocks and I would want to invest into X number of stocks, but now I'm happy about that information. But there exists a gap between that dopamine of action. And people really get stuck in the information aspect where, they make a plan and they list it down, they know what they want to do, but they don't get to doing it. So they get the dopamine from here, they never get this, and they continue to feed into this, which is the main issue, right?
We're all guilty of that. I've done that too. 2024 was a year. One of my resolutions was not to read any books. Although I love books and I love that we're in a library, but I realized that in the year before that, I read maybe 20 or 30. And guess how many companies I started? 0. So in 2024, I decided not to read any books. I failed. I read 1 or 2 because I really needed to reference something or I really needed the material in them. But I think especially the more educated and the more intellectual people out there, not saying I'm one of them, but I'm saying I understand, you tend to fall into I need more information to act. I need to plan more to act. And truly, the only thing that will help you is action, not education. So take action, try and fail, and you'll learn more than 10 books about the topic.
100%.
So this is the shift in mentality that I think is super important for anyone going from corporate to building your own business.
100%. I feel like you don't want to get stuck into analysis paralysis, right? You want to say, I like what you said about referencing, because you can look at a book and say, I want to learn from past mistakes and I want to learn this particular specific topic. But if you're just going to read 40 books a year and not do anything about it, then you're not really getting it, right?
100%.
And this, in terms of action as well. I mean, speaking about EmFlex in particular, what happens next now? Because now you're getting established in Saudi. Are you mainly looking at moving to different markets? Because you're familiar with different markets in the region, right? Having worked across different areas.
Yeah.
Or are you, like I said, moving into different verticals?
First things first is to capture as much market share as we can in the auto financing space in Saudi. And our solution is really to build that network, like a deep network with financial institutions and banks. We're talking about 40 financial institutions, all in all, distributors and whatnot. And the easier thing would be to go into different verticals within Saudi, because you've already established that network with banks, right? You just need to get a different product or like integrate into different channels with different merchants. But you already established those relationships. I mean, so far, the objective is really to replicate into different verticals within the same market. I mean, at the end of the day, who knows? Things could change, especially in this fast-moving environment. But yeah, that's the objective. I mean, later on, if you're able to capture the majority of the market, you would be a unicorn by then.
Sure.
And and then you can sort of go to different markets. But and even the UAE is also a favorable place to be as well. They have really good like financial infrastructure, payments, rails and whatnot. So that's always great.
I mean, when I think about it, you're almost integrating your APIs into specific distributor, websites or whatever platform that they have. But if you were to expand this, would you, and this is me spitballing, trying to understand your philosophy, would you create an ecosystem that has housing and mortgages and cars and this, and people come to your platform? Or would you still keep it decentralized almost and look at distributors in different industries and then plug your APIs into them?
Yeah, I mean, that's a fantastic question. Usually you start with the back end layer that does the integration, but then again, you'll gain enough traction to build your own marketplace. And this is actually the same similar strategy that all the successful buy now pay laters they've done. Like essentially, because what really happens, you don't necessarily have to get your own traffic, right? So research suggests that buy now pay laters, they can slash their digital marketing budget by almost 75 to 80%. Why? Because you're capturing the traffic that gets to the platform itself, right? So you're just there, they can see you and whatnot, right? So with that, you get, first of all, your cost of customer acquisition gets much lower, and then you can get a lot of deal flow and build your own brand without having to spend as much money, right? But then at a certain point, like in say 12 to 24 months, you can start having your own brand awareness and reputation, and then you can start building your own sort of marketplace. And one of the things that we actually have lined up for that is, okay, if I integrate, if I centralize the whole inventory in the market and I say I want a certain type of car, you can come to my portal and then you can search that type of car and I'll pull all the data from all the market instead.
That's what I'm thinking. Yeah.
You know what I'm saying? Let's visualize this, right? For example, you go to, Dubizzle, right, to buy a car. Or let's say you want to use the buy now pay later solutions, right? So you can find Tabi and Tamara, right? Who else is there? But assuming that banks want to get into the game, you have 20 banks and 30 financial institutions. How would a user experience look like on a platform? Would you list 30 banks and financial institutions? Or would there be some smart engine behind that selects the
best
banks
available rate
that is best for you, right? I mean, even if you think about it from a visual sort of design standpoint, it doesn't make much sense to integrate everybody, right? And that's where it becomes even costly for banks. So you need that piece that sits in the middle.
Because then some particular banks lose out customers they already had, because loyalty, it doesn't, if it's money coming out of your pocket, loyalty is not going to exist.
True.
Quite interesting. Okay.
Yeah.
And in terms of what you've done so far, are you guys bootstrapped? Are you looking to raise at some point? Because you mentioned someone's just raised, Lendo's just raised 700 million debt. We've seen Sarwa do fantastic things recently. We've seen different, I mean, more VCs come up, either backed by multifamily offices or even international VCs come into the picture here. We've seen secondary VCs now with Key Capital and, General Atlantic coming in. And then we've also seen, the advent of startups actually moving. So I feel like there was this almost barrage of we can do pre-seed and seed and Series A. But then with MENA startups, that's kind of where it ended, and they got consolidated into bigger players. And now we're seeing the Series B and Series C and Series D coming into this region for the first time because it's bigger tickets, right? So are you guys looking at raising at some point? Are you bootstrapped, or does the economics of your business model already serve you well enough?
Yeah, so far we've bootstrapped, but we are very close in closing our pre-seed round.
Okay, congratulations.
Yeah, thank you. So it's gonna be announced like over the next few weeks.
Okay.
But yeah, we're almost there. It should be, I would say, sufficient for the next, say, 6 to 9 months.
Do you mind me asking what your burn rate is?
Our burn rate,
Yeah.
it's not much. It's around $7,000 now.
Okay.
We do try to be as resourceful as possible. It's a mindset you need to have in the very early days. But yeah, we plan. I think we will have to raise a seed, potentially a pre-series A round at one point. But beyond that, to your point, you may break even, and you don't need to necessarily have to raise as much capital later on. We're not a financial institution per se. We're just a technology provider, right? So the economics are looking really good.
Okay.
Given that we don't have to do much digital marketing as well, so kind of serving us really well.
Yeah, I mean, especially with you being B2B, you almost like piggyback on
exactly,
which is brilliant.
That's why I was saying like going to you should go to those like exhibitions and like. But then again, if you have a specific market that you're after, you can just set up a meeting or just call someone.
And this is something I wanted to talk to you about as well. Having that specific market, like we mentioned, on our call previously. A lot of people in today's world, in startups, they say we'd rather have a big, serviceable, obtainable market. We'd rather have a big TAM and then break it down into some. And we'd rather be able to cater to a large number of people and then plug in ourselves. I think quite the opposite. And then you can tell me if you both agree or not, because I think it's better to have a smaller market and grow with the market, because as long as the market itself is growing and you capture a decent share, then you're growing with it as well. You're
talking about a certain, let's say, product within a geographical area, or because let's take the MENA in specific.
Yeah, market size, yeah.
So MENA in specific is a bit sort of, I think it has a unique perspective. The biggest markets in the MENA are Egypt, Saudi, and then UAE. By far in terms of commercial activity. I would actually prefer to be in one of those markets, even with the initial product. Like I wouldn't test it within a different market and just come to a larger market. The reason for it is because there are certain ramifications to that. So for example, it's not about, let's say, if you go to a smaller market, then this also, you have less talent in that market. This also means you have less money coming into that market, less deal flows that is happening in the market, less maturity in infrastructure, not necessarily the best regulations and frameworks. So there is a host of things that you need to consider as well, looking into that market. So yeah, for me, it's like, and obviously the plus, if that market is growing like year on year, that would be great. And I think Saudi is a fantastic place to be. It's a massive market. You have around 33 million individuals in that market. You have a lot of deal flow happening, a lot of activity happening in the market, a lot of momentum as well. I wouldn't say it's the easiest to crack into because it has its own culture and its own uniqueness. However, if you're determined to do it, you can do it, obviously. So
no, I think you're right. In a geography that has a large commercial center, right? So even if your particular niche is small right now, it has the space to expand.
Exactly.
That's, I think, the point we're trying to
get. Yeah, like the niche or that unique. Yeah, I totally agree with you.
No, I think also both ways it works. We're also in the embedded market. And if you look at that, that's something that's growing very rapidly. It may not look huge right now, but like the internet, like the same thing Amazon did. The internet was growing 1,000% per year, and he started and grew with it. I think we're in a big enough market where the opportunities and the funding and the banks are there, but we're going in specifically we're dominating a niche that's growing much faster than the market, which is the embedded lending within the big market.
Yeah. And one of the good examples about this is actually there are 3 platforms in Saudi that has a digital first approach to selling cars. I can sell you, you can come see the car, but my first approach would be digital. that I sell you the car digitally 100%. And one of the founders told us like 70% of their sales is fully digital, which is shocking by the way.
Customer adoption, I would assume, especially in Saudi, people want to see the car.
Exactly.
They feel it, they want to drive it.
Exactly. But this guy is telling us like after 3 years, people start to trust them. And 70% of their sales is digital first.
Because you're right as well. This is a very sticky market. If customers have loyalty to you and they have worked with you for a long time, then that relationship is forever.
Exactly.
The Saudi market, 70% of it is under 35. Phone penetration is more than 100%, i.e. there's more phones with internet connection than people. So it's very sticky. And once it works, you tell your cousins about it. It's very community driven also. When you trust something and you build that trust, why should I go to the dealerships and spend weeks negotiating when I can just order it online like I order my,
Clothes.
Yeah, clothes or phone cover. And it comes delivered to your house and you have a warranty to return it in 10 days, no questions asked.
Does it come with a ribbon and everything?
We can add that for you.
You're buying it to your wife, I guess.
Just saying, I mean, me from a personal standpoint, at some point, inshallah, when I get my first car, I will come to you and ask you questions about this.
Definitely, man. We'll get you the best deal. So
awesome, thank you. Let's take a step back for a second. You're building this wonderful, mashallah, impressive entrepreneurial journey. Just for the people watching as well, what does that mean in terms of like work-life balance? And I know this is a weird question to ask because when you're building something, you typically don't have a balance. But do you implement a philosophy where you'd like to strike a balance at some point, or what is your philosophy when it comes to work? And for example, how big is your team right now, and how much do they listen to that?
I'll start with the life balance. I think it's important. I think Jeff Bezos did a good job saying it's life-work harmony. So how can you integrate the work into your life and not hate your life? So we do it in different ways. For me personally, Saturday is my no work day, which is today.
Thank you for coming in.
No, like no worries. I don't consider this work. For me, like it's fun. It's fun. We talk about the stuff we care about. We meet new people. So this is lovely. By no work, I mean I don't sit on the laptop. I don't send emails. I don't think about work as much as I can, and that helps me reset that one day. And I think every few months it's good to disconnect for more than a few days. So that's something we help each other with. And staying healthy is also important. It's something I've been, needs to be a bit better for me. Like I'm still going to the gym, but instead of 3-4 times, it's 1 or 2 times. Workouts are slower, but I think it's okay to slow down, but don't stop. It's okay to recognize there are seasons in your life where you'll be a little bit less balanced in one way or the other, but it's part of the game. And as long as you're happy and you still have a little bit of flexibility to control things, so you can manage and create the workflow that works for you.
Yeah, I think it's an amazing. It's a very interesting question. It's actually it's an important aspect. Like we as co-founders also look at things, and we have weekly sessions to discuss. I swear to God, we have like
we don't talk about work. It's called co-founder feedback session.
This is why you had that look when I asked the question. You immediately looked at each other.
Yeah. It's something that we talk about a lot. And I maybe like my experience, like I've been in the space for like entrepreneurial for the past, let's say 10 years. And at certain points, I would lose my work, like life balance.
A burnout at some point.
Yeah, burnout. Right? You'd get overweight. You don't go to the gym. You're eating like very unhealthy. You sleep very late and you wake up very late. And like everything becomes very difficult in terms of business and otherwise. So I've learned like over the past 4 or 5 years that the managing your health and your mental state is pre-mandatory or actually prerequisite for you to perform well on a business level. It's interesting actually because during the Antler residency, you've been living with those people for 3 months and would tell you like what sort of habits they have, like who sleeps till noon and who's waking up early and who's working out and who's not. So I was working up and
we both didn't stop working out. And I think if you can guarantee the founders or the executive team in a company are healthy, mentally first, emotionally second, and physically third, the company will do fine, I think.
I'm starting to see that as well. I feel like, and I mean, this is my first year in the industry, right? But I'm starting to see that the people who take the time out and prioritize themselves, even to a small extent, if it's a 10-minute walk, if it's a 30-minute gym session, if it's something that keeps you grounded, if it's reading a book or something like that, it tells you that they know how to prioritize what's important. and they know how to take care of things from a long-term vision perspective.
100%.
So then when you founding a company with that person, you know that they will know when to do things in the right order.
The main idea is you want to work with someone who has good habits built in already, right? If they have that, it's easier to work with them longer term, right? Why? Because if you have good habits already kicked in, and usually habits, they take 2-3 years to be incorporated fully into your life, it's easier to sort of be able to focus on work as well as your life without being distracted, because it's a rough journey, and making sure that the sanity of let's say the co-founding team is not important for you or for him in particular. It's just across the board. It's for the whole company, right?
Yeah, because I think you have to think from a very holistic perspective. And like you're saying, it takes maybe not years, but habits in particular, you start to build upon them. So once you have it on autopilot, the first one, then you have the next one on autopilot, and then you don't have to worry because this is synced into your lifestyle, and then you can build the third.
Yeah, 100%.
Absolutely. I've learned this specifically this year. But I mean, just to wrap things up, what can we look forward to for the car financing industry, for EmFlex in particular, and maybe also what can we look forward to, in terms of fintech's growth in Saudi in particular?
For the car financing in Saudi in particular, I think you're going to hear like really good news in the next few weeks when it comes, how fast can you get a car and getting the best offer for you in the market. I think there is a lot of challenges now, but we're working on those, and this will improve substantially and will make it, inshallah, more like a personal loan or a buy now pay later sort of solution. So that's the objective. In terms of fintech in general, I think we're on a good trajectory overall in the region. There is a lot of I would say there is a lot of new solutions coming up. The payments space is over mature. However, like in the let's say embedded finance, embedded lending space, whether it's SMEs financing, supply chain financing, B2B like financing and whatnot, I think we'll have a number of good plays coming up also in the next few years, I would say.
I think it's an exciting time to be in this region on many different aspects. And fintech, I mean, it's been the biggest or the second biggest investment last year across the GCC. So there's a lot of money flowing into it. And while money isn't everything, but I think you can expect a lot of innovation. We're going to be part of that as well. But there's other companies doing very interesting stuff that we're looking forward to, because we have partners in the market. You cannot do this alone. We need the open banking partners. We need the core banking partners. So we're very excited for everyone and looking forward to connect. So if you're in this space, fintech, UAE, GCC, you know where to reach us. It'll be in the caption somewhere.
He really is the partnerships guy.
So don't hesitate. Send a hello and send me your favorite fruit, so I know whether to respond to you or not.
Okay, awesome. Thank you so much for being on this, guys.
Thank you.
Thank you.
Really appreciate it.
It's been really fun.